In this video, I'm going to be talking about red spikes primarily. As you may have seen on some earlier videos, these are one of the key reversal patterns that we are aware of. And I've got an area picked out on a chart with a bunch of spots marked that will allow us to look at them fairly quickly. So let me switch over to the web page, and I'm going to start right in here. I'm going to move this red indicator line right over to the one that I'm talking about, and hopefully I'll follow with indicator lines as I move. I start here because this is the classic red peak that we think of. It has it's a strong red candle, and it has the zip yellow under the 50 line. And in this case here, the red peak is at 80, and the zip yellow is at 40.2. And that's a classic reversal pattern. And when you get that classic reversal pattern, you also notice that you have two big red candles, which is really nice to see. This is an engulfing pattern actually. The red candle started above the body of the green candle and ended below the body of the green candle, completely engulfed that candle, and leads to a nice downtrend over the next 3 days. It's represented or clearly identified by the zip Zion that's highest, meaning if you've seen any of the zip Zion videos, you know that when zip Zion is highest, it just continues to, the price continues to go down. Now, the other factor that you have inside of this is you've got a low green candle, a low green zip line as well. But let me come back, or let me compare that with a couple of others before I make some other comments. I'm going to move over to this one right here. This one is a red peak that is under 50, and we call it a low red peak. It also has a low zip at 12, a low zip yellow at 12, and a low zip blue at 12. So it's considerably lower. We need to think about these candles because it identifies a lot for us. The zip red, if you've heard me in the past, you've heard me talk about the zip red candle as being the most one of the most active or sensitive lines, and the swing pink as the other most sensitive line. And in this case right here, the zip red could not even make it up to the 50 line. So it just gives us an indication of, hey, everything is, moving, is going to be going down the next day. We're in a small consolidation period where we've got a few days of a fight between the bears and the bulls, and that's identified with your longer tails, upper and lower tails. This next one I'm going to talk about is actually an exception, and it's good to see these so that you identify this. And I'm not, you've noticed here that my chart just has the zip chart. I don't have all the other charts on it, and I'm trying to move through this fairly fast just so that you can actually see this stuff on a zip chart in many ways, and you can get it. I mean, you don't even have to look at some of the other charts, at least after you've been trading or after you've been using this system for a while. If you think about this, you've found this. Let's just think through the logic of your trading. You found this particular candle You have a red top, you have a low yellow, zip yellow, which is the classic, hey, it's going to be going down, right? But from here, you have a choice. You can if you're a person that just buys and places orders after market, you place an order to go short, and what happens? It gaps up. If you're a person that is not buying or placing orders after market, and these could be individuals that have a job to go to and they are trading in the market, and they place their orders to buy or sell for the following open. But if you're looking at this and it opens up and you have a gap up, remember from our rules about gaps, when it gaps up, it typically goes down, and then it ends up a green candle on the end of the day. Excuse me, you may be thinking about, I may have said that the wrong way based on how you're thinking about it. Well, the basic rule is that when you have whether it gaps up or it gaps down, the candle usually ends up being the opposite of what it started. And so if you got a gap up and it starts up, it usually ends down or red. If you've got a gap up and it ends up as a green candle, it usually goes down first and ends up as a green candle. So the direction that the trade starts after the open is usually the direction that the ultimate candle ends up at the end of the day in the opposite direction. So hopefully that clears that up. But in any case, here you're at this, you're on this line right here. This has been the night. You've made a decision that you'd like to trade this stock, and bingo, it opens up. You're not even 30 seconds into the open, and you've immediately identified that you have a gap up. What you also have is your zip pink line has gone up. And that zip pink line is probably, even though that there was quite a battle on this day because this is a spinning top, and this could have made 3 or 4 higher highs or lower lows. When you have a fight like this, it just goes up and down and back and forth. But anyway, you've got, at the end of the day, you've got a spinning top with some long tails to it, but you have a zip pink that is in a low angle up, which is just, I mean, classic, I'm going down tomorrow. And especially when you have a pink, this is the pink is the highest candle on the zip chart, and that again is indicative of it's going down tomorrow. So if you were an overnight buyer where you placed orders overnight, you'd look at this thing when you got back and you go, oh, we got a low angle up on the zip pink line. And so bingo, what I thought yesterday it was going to go down to is it's going to go down, and then I'll be fine. I'll set a stop order at, at the end of the right at the end of the day, or when there's a certain target point. Some people would place their target point at this low for tomorrow's close. Some people will just time it. They'll say at 10 minutes before closing, sell me out, or close it out rather. So however you place your stops, or however your trading methods are, or whatever the case may be, you're not going to get hurt on this particular trade, and it's an exception to the rule. Okay, So the primary thing is that I want to get you to do is to think about what these lines are doing for you, what they represent. And if you're not aware of, or if you haven't seen it yet, you should go to the video on the indicator line definitions, because they talk about how the for example, how the green line is the leading directional, the green line is, the red line is the zip red is a leading directional indicator, and the zip green is basically traders entering and leaving the market. And so go to that video and identify with what they're doing. Print off the sheet text that shows that, and just get familiar with what these lines are doing for us. The zip pink line is basically a price barometer, both directional and locational. When the pink, for example, is high right here, then it's a good chance that it's going down. If you look over here where I've got this red vertical line right now, the zip pink is very low. In fact, zip pink right now is at 8.28. And I'll get back to that in a little bit, but I'm gonna go on here with some other directional line items. Here's, as long as I'm at it, another exception. I might, well, I guess I shouldn't say exception. I should say, you look at this and you got, what do you have? You have a zip red peak, okay? And this zip red peak is at 94. Yesterday, the zip red was at 31. On this classic one that we had back here, this one was at 80, and the day before it was at 19. So this one here went up about 60 points, and this one here went up probably about this, probably about let's see, 90, I forgot what that was. That was 31, about the same, 31 to 94. But the big difference here is, remember the basic rule for a red peak, and that is it has a strong, it goes up real strong, and it has the zip yellow under the 50. Now in this case here, zip yellow is at 64, and so that is one I would not go into, simply because if you're looking for a short, this is not it. And it obviously shows up with our next day. Looks like green. This day right here is what I would say is a green doji. That it's like a T-top. The body is toward the top of the doji, and obviously, even though some of your lines went down, this one actually went up a little bit, and you've basically wasted a whole day, and you may, depending on when you sold it, lost some money. But you obviously, if you did get into it at the end of this day, there's a point, if you set some target points for a stop order, or however you would have done it, you could have captured some profit there. Now I'm going to move back over in this direction here. I'll leave that one right there for the moment. I'm going to talk about this one here that has this red line, and this red line is actually a one-day red-green peak, and but obviously we don't know that when we're looking at just this line. All we see is a red line there's a red indicator line with a green candle, and we have a red spike, but again we're up in that above 50, and it's something that I just don't do. And it did go the next day here, it did go red, but it didn't go red very much. So it's one of those that you know, you got to make a decision on what you want to buy or invest in, and because you're looking for long candles, you're looking for volatility, and the volatility between a high red peak and a low yellow, zip yellow, is what can potentially, not always, but can potentially give us that thing that we're looking for. And keep in mind, it's just like on this line over here, we got that classic red peak that we started talking about from the beginning. This one is 3 days long, so these aren't just one-day issues. Sometimes they can be, but you just, you know, look at the indicators on the following day and see if it looks like you're in a continuation pattern, or if it's not in a continuation pattern. All right, now I'm going to move over in this direction. We're going to talk about this one right here. This again is a real classic. The red is at 72, so it's not real high, and the yellow, zip yellow, is at 44. But you do have the zip pink, which is the highest. The zip pink is at 78, and that's like an automatic. I mean, it's going to go down tomorrow, and in this case here, you got a full body drop, and that body is probably 3 times the average of a lot of the bodies that, you know, I mean, if you look up into this direction here, there's not much in the way of body change, real body change, whereas this one was pretty decent. But it's got 2 indicators together. It's got your red top with the zip yellow under 50, and it has the zip pink highest. And so you got 2 indicators right there that say it's going to go down tomorrow, and we haven't even looked at the other 3 charts. If you go to this one right here, you've got a super long green candle, and you've got a what do I want to say? You've got a zip yellow under 50, and you have, in this case here, we have a zip green at 0. And you might, you look at that and you might think, well, hey, you know, like over here, if I drag this over here, when you have a zip green at 0, it goes up and the candle turns green the next day. And you're over here thinking, hey, I've got a 0 green, zip green, and I've got in this case here, the red is at 93. But I do have my yellow at, my zip yellow under 50, and the zip blue is actually 50.6. But, you know, what's going to happen tomorrow? This thing is going up. Okay? Well, again, think about what your lines represent. The red line, the zip red line, is a leading directional indicator, you might say. It's a fast mover. It takes you with the price most of the time. And the green line is your traders that enter and leave the market. And so, okay, so you're sitting there thinking, well, okay, I think the red line is going to go down because it's at 93, and it's just logical that it would go down. And the green is at 0, and it's logical that it would go up. But traders, the green line, traders entering and leaving the market don't control the price. You need to look at the indicator that controls the price. And so tomorrow we end up with a red candle, even though we opened up, looks like could have been a hair higher, but it's almost the same. This green candle has as a previous close to this red candle here. They opened up almost identical. and there's a pretty good upper tail, and then it ends up at the end of the day in a red position, just like it was logical to assume that when we saw that on the previous day right here. And so this red top again works. You need to be, like anybody trading, you need to be picking your entry and exit points. And your exit point may be easy in just that it's a timeout deal. You're at the end of the day and you close it out. But you do need to define your entry point and see where you're at. So depending on what you see on your other charts, it could tell you that you're going to have a big push up. The only thing that you see here on your lower chart, excuse me, on your zip chart is, and I'll say, and I have indicated this on some other zip Scion videos, but one thing here, because zip Zion is similar to zip green, but it has a volume factor inside of it. The zip Zion is lowest, and even though it's going down, it's at this point where it's lowest the first day, and when it's lowest, you know, typically prices go up, okay? But it's obviously not the lowest. You still have green, you still have the zip green that is lower. But I'll show you, in a few minutes, I'll show you a few things about this zip green and zip Zion relationship, because technically speaking, yes, it did go up, and that's, you're picking up on the, hey, this candle is going to move up. We know it's going up. And so you actually have an opposite push that's showing up at the same time. You have a red candle that's at the peak. It's likely to go down. You have your zip yellow under 50. So that's what really creates your high probability of going down the next day. But along the same lines, you have a zip Zion that is lowest, except for the green. And I'm just going to tell you that because the zip green and the zip Zion are, how do I say this? They have, they're mutually beneficial aspects to them. And what I'm trying to say is the green does not cancel out the zip Zion. So previously on my videos I've said, hey, the zip Zion always needs to be the highest or the lowest. And there are significant exceptions if we just are dealing with the green in the picture, as in here. But this just the zip chart right here has told you that there's going to be an open, and it could gap up and go, it could gap way up and go down. You don't know what's going to happen here. You just know that this candle tomorrow, after this closing, it's going to go up. And by the end of the day, it went way back down. So that initial pressure, bam, got hit, and it got pushed up, and then it came back down. Very visible. You just need to think about what these lines represent and what's and why they're doing what they're doing. I'm going to move to this one here. We got another red peak, and we got a zip yellow that's low, and so our, you know, typical of our timing, we think, hey, this is a decent opportunity. Again, just here on the zip chart, we see that the zip has gone down and hit your long-term lines, your yellow and your blue lines. And remember, when we talk about down touches, it's a narrow line, or it's an alternative line. How do I say this? It's not a long-term line. So I'll just say a narrow line down touches a wide line. So it's, in this case here, it's the Zion down touching the wide line, and bouncing back up again. And so next, even though you got a red here, you've got a definite sign of a down touch hitting the wide lines, and tomorrow it's going to end up green, which in fact it does. Now this could have just as easily gone up and ended up red as in the previous example, but in this case here the forces of the market dictated that it remained a little bit green. And then bingo, what do you get on this day right here? Here you have a red-green peak. And now you know at this point that things are going down for sure, because you have, at this point here, you also have a pink low angle up, and so it's just barely over 50 as well, and so boom, it's going to be down, and it ends up going down 3 days. Actually, this fourth day was massive, but you may or may not have picked up on that if you were in the trade. Moving over to this one right here is one I want to pretty much one of the last ones I want to talk about. Now, in this, let me say here, there's a lot of things going on in this one right here, and I want to start right over here, and this is where the green hits, and I'm going to expand on this chart a little bit here. The zip green is at 0, and the zip pink is right above the zip green. Now in this case here, the zip pink at 9, so it's not by any means near it, but it is the closest line to the green, and that's what I'm trying to get, because you're going to see this a lot. If I bring it down a little bit, you're going to see this crescent move, or this low angle move a lot with the zip candle, the zip pink going in a low angle down move. You've got a down mark, or a down trend going on here, and it began back at this left vertical line, and it began at that point where the where the zip Zion is the highest. The first day that the zip Zion is the highest, that starts your downtrend, and it continues to run actually all the way through this thing here. But just so that you know, you're trading this thing and you're in a swing trade mode because you see this zip Zion, and then you're still with on this day here, you're still, hey, I'm okay, I'm going down. You hit this day here, and the pink line, your zip pink, is continuing down. You got what's pretty much a spinning top, and so you got a good battle that's gone on between the bulls and the bears on this day. But you also have your red top, and it's under 50. And the yellow is zip yellow is significantly lower. And so again, everything says that tomorrow you're going down. So then you go through tomorrow, you get to the end of the day, and this is the first day when you could actually say that it might go up tomorrow. And the reason I say that is because your zip yellow and your zip blue, they are at, the zip yellow is 3 and your zip blue is at 4. And so again, that's indicative of hey, it may bounce back up tomorrow. But what do you see here? You see a zip Zion, that light blue line, that's highest, and that tells you it's going down tomorrow. So bingo. Now that's without even looking at all the other charts. Just on the zip chart you can see this. And so now we get to this day, and this is very typical. I'm going through this process because I want you to see the pink-green relationships to what happens inside of this thing. And this is typical of how the green and the pink work together. Okay, now we're still with zip Zion highest, but we do have the zip yellow and blue that have gone up, and then the zip red and gray have gone up, and at that point you can usually, or excuse me, you can oftentimes see a increase in price, but you have to watch the zip line, okay? And the one thing that I want to point out to you here, I'm just gonna read off some numbers. Beginning back at this red line right here, the volume is 273,000. The next day the volume is 160,000. The next day the volume is 206,000. This day the volume is 267,000. This day the volume is 187,000. And on the right vertical line, the volume is 161,000. So you're typically running between 150 and 225 on volume. I mean, it's been going down, boom, 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 boom. It's down 6 days now. And the next day, we obviously, the pink has stayed low. The pink over on the left vertical line is 1.12, and the pink on today's red line, the right vertical line, the volume, or excuse me, the pink is 0.74. This third day right here, I'll move this red line out of here. But on this vertical day, on this vertical red line, this day right here, your zip yellow, excuse me, your zip Zion goes from 12.95 down to 0. And when Zion hits, when the zip Zion hits 0 and your zip green is obviously at 0, that is usually the day of the turnaround. It also, if we look at the data window right over here, zip pink is at 0.3. So that is pretty low, and that is zip 3 is almost an automatic for this thing going up. But I've seen these zip lines, these zip pink lines, be at 0.02. I mean, right now this one's at 0.3. So I've seen them very, very, very low, and before they go up, because they'll hit 0.19 or 0.07 before they go up, and this one here is right now at 0.3, so potentially it could go up. But the zip Zion, when it drops to 0, it's not, zip Zion will also go for a day or two longer, but that is a real critical piece of information, especially when we see that significant drop. And now I want to make you aware that the volume on this day is 1.8 million. Now that's 10 times what the volume was on an average the last 6 trading days. 10 times that amount. When volume is a great indicator, what do I want to say? There's different ways to describe it, but volume can give you a lot of information. Volume works great when you're in a consolidation period, maybe for 3 or 4 weeks, and you get a breakout and on a large amount of volume, and bam, it's real easy to buy into that. But it's just like when I told you there's the 1.8 million. I mean, your first reaction, well, wait a minute, this thing went down. Well, keep in mind, what does the green line tell us? The green line tells us that this is the people entering and leaving the market. When your green line is at 0, they're leaving. What are they doing? They're selling. They're leaving the market. So your green line is telling you that they're at 0. Your pink line is telling you about your it's basically your price meter. It's telling you about price, because a pink line follows the price. And the Zion line, the zip Zion line, it's similar to the green line, but it has a volume factor in it. And I don't know for sure what happened this day, but I'm pretty certain that there was a huge amount of individuals, or at least a huge amount of shares, that were shorted. So you have a huge amount of volume, 10 times the volume, and that candle went down. See, so volume can be a good informational barometer, but it doesn't tell you anything about direction. And so we don't use volume much, but we do mix it together with other things to identify. This Zion line records negative volume, or I guess that's you know what I meant, I think, but you don't, that I may have said that wrong. But it's recording. We got a lot of volume, and it's just going short. And so you need to look at you need to think about what the lines are telling you. I've got one other one here that I saw earlier. If I can find it, I gotta go like this here. Oh, where did that thing go to? Oh, here it is right here. Let me move this line over here. Here we got a line, a red top. We've got it's at a lower angle than what you might like to see, but it still is a red top. And because we got our zip yellow low, our red top is at 78 and the zip yellow is at 36. Okay, we also have the green going way down, and the green's at the bottom. It's not at 0. The green is at 26. And so your reaction might be, hey, it's going to go up, or I'm not sure if you want to say going up or going down, but I think it's going to go up because it just came down really hard. Now, you might say, well, the green is going up, like just like over here when the green went up. Now let me move this so you can see it, because it's tough to see on the video. You got a green line right here that went down. That green line happened to go to 0, and it bounces back up, and this candle this day is green. And the same over here. You've got a green candle that goes up, but it turns out red. Now what caused that? It's the same thing that caused it right over here. You need to think about what your lines represent. Even if that green candle goes up, that doesn't mean the price is going to go up. It only means that more people entered the market. Okay? And so more people entered the market on this candle right here because the green line went up. But what did they do? They were in short positions. But the price went down. So, great examples here. We just are dealing with the zip red peaks, but I threw a few other things in there. But it gives you just a real indication of what this system can do. I love the system. I can't get over how detailed it can show you what's happening tomorrow. If you haven't gone to the video about the indicator lines, it'd be a good idea that you do that, because you want to get the definitions of those lines, and that would be one of your best videos to look at early in the process. But maybe you've already done that, and if so, great. Thanks for listening. I am going to exit now, and we will see you on the next video.